I recently shared this chart on social media that kind of sums up what is happening in the greater Toronto area real estate market right now. From last April until now, sales are way down, but terminations are way up. Now, the post generated lots of questions. How does this April compare to previous years, not just 2024, but going way back? So that's what we're going to cover in today's video. We're going to break down each quarter since the start of 2016, look at reported sales versus listing terminations to try to gauge where the market is right now and where it might be headed for the rest of 2025. Hey, if you're new here, my name's Rob Marsiglia. I'm a real estate sales representative with Valerie Real Estate, Canada's first ever AI-powered brokerage. Each week on this channel, I bring you stats, insights, actionable items to help you with your home search or home selling process. So if that's something that interests you, you get some value out of today's video, consider liking it, subscribing to the channel so that you don't miss anything going forward. Let's start right here with this post that I shared off the top. So this is just for the 905 reported sales versus listing terminations, and this was through 14 days of April. We were comparing 2024 on the left to 2025 on the right. You can see that sales in the 905 were down 21.2%, whereas terminations spiked by 55.3%. A very similar story in the 416. Over there, we saw sales come down by about 18%. And again, terminations spiked by more than 50%. Really quick off the top here, I have a question for you. Does this surprise you that the 905 performed quote unquote worse year over year through early April? I figured with all the headlines we were seeing in the Toronto condo market that maybe those numbers would look a little worse in the 416 than we saw in the 905. Anyways, let me know what you think in the comments below. Here's how I want to tackle today's video. We're going to do a really deep dive into the GTA freehold market. And once you see the charts that I'm going to go through, I'm just going to do a summary on the condo side of things right at the very end. So if you want to see how condos are performing and where they may be going in 2025, you're going to have to wait around just a little bit longer. But to start things off, here we go. GTA freehold quarterly reported sales per Toronto MLS. On the very right of the chart here, we have Q1 of 2025. Well down from Q4 of 2024. And as a bit of a call out, you can see we're going to compare each Q1 to Q1 of 2025. So the lowest by, about 1,100, 1,000 listings. Q1 of 2023 was the slowest up until now, but you can see well off kind of the peaks we saw in early 2021. Even early 2022 when the market started to correct as a result of rate hikes. Not only was it the slowest Q1 that we've seen going back to the start of 2016, it was also the second slowest quarter that we've seen, period, per the MLS, going right across the GTA freehold properties. Q4 of 2022, generally a quieter time in the real estate market, was slower than Q1 of 2025. But I think it does say a lot that the start of the year, what's supposed to be the kickoff into the spring market, things start to ramp up in March, clocked in at the second slowest quarter that we have seen since going back to 2016. Another interesting trend is that it's the first time since 2019 that we actually saw sales decrease from Q4 of the prior year to Q1 of the current year. So Q4 2024 saw a big drop off into Q1 of 2025. You have to go all the way back to 2018, 2019, and 2017, 2018, correcting markets to see a similar trend play out. You can see that, 2019 into 2020 was pretty flat, but everywhere else, a definite uptick in sales activity from that slow winter market into the kind of hot spring market that you're used to seeing in the GTA. So quick recap. Historically slow sales quarter, Q1 of 2025 on the freehold side, down from where we were in Q4 of 2024. Again, a trend that we haven't seen since going back to 2019, 2020. But now I want to layer in those listing termination numbers. And that is these faint blue lines. So you can see that in Q1 of 2025, we had more listing terminations on the freehold side than we actually saw sales reported. Calling out Q1 going all the way back to 2016, this is the first time that we have actually seen listing terminations outpace sales in the GTA on the freehold side in the first quarter of a year. Here we look at all the times prior that we've had terminations outpace sales for an entire quarter. So it has happened 8 times in total. The first time was back in Q3 of 2017. Then we saw it happen 3 times in 2022, the start of the big correction. Twice in 2023, that was in Q3 and Q4. We only saw it happen once in 2024, that was in Q3 of last year. But now, like I said, for the first time in a Q1, terminations are outpacing reported sales. What does this tell me? It tells me that there is still a gap between seller expectations and what buyers can afford. That's the first thing that it's telling me. So buyers are making offers on properties sellers are just not happy with the numbers they're receiving, so they are choosing to terminate their listings. Because what I want you to remember is we're looking at terminations exclusively here. We're not looking at expiries. We're not looking at suspensions, which are kind of short-term terminations. These are just terminations. We are not happy with how this listing is going, so we're choosing to pull the listing off of the market. And as a seller, you have the ability to pull the listing off of the market. The second thing that it's indicating to me right now is that we're not seeing this seller panic set in quite yet. If there was seller panic, they would be selling their properties for the best offer that they were given, whether that's on an offer night or whether that's just, the listing's been sitting there for a few weeks. Somebody brings an offer that's maybe slightly lower than expectations. They would be taking those offers if they truly had to sell right now, or if they had the realization that they had to sell right now. One more way to visualize these two bar charts is to throw a line in there. This shows you the terminations to reported sales ratio. You can see we saw an uptick from Q4 to Q1 of 2025. And anything above this line, which is kind of one ratio where things would be even, that shows you that there were more terminations than reported sales in that quarter. And here's Q1 highlighted in each and every year going back to 2016. So you'll note that this is only the second time that we've again seen an uptick from Q4 the previous year to Q1 of current year in this ratio, terminations to sales ratio. The last time we saw that happen was 2021 into 2022. And again, the ratio wasn't above 1, but it did climb from Q4 to Q1. But what you will note is that Q1 usually represents roughly the bottom for any given year. Now, historical performance or past performance isn't always going to be an indicator as to where a market is headed. But going back to 2016, the majority of the time, this ratio is lowest in Q1 of that year, and then the ratio starts to grow, meaning we're going to see more terminations relative to sales as the year progresses. So let me know in the comments below if you think that that trend will hold in 2025, or if we'll start to see this ratio come down a little bit. In my opinion, this needs to come back into balance, this ratio, before we really determine what true market value is. If sellers are in a position where they have the option to terminate, there's not as much stress in the market as you may believe as a buyer wanting to lowball or get that steal of a deal. This ratio is going to have to come down. Sellers are going to need to be in a position where they don't have the option to terminate, and that's when you may start to see kind of those smoking hot deals that buyers are looking for. And while this indicator isn't perfect, it does highlight the relative lack of stress from homeowners right now. We're yet to see the kind of percentage of listings that contain power of sale or mortgage in the seller name exceed 1% across the Greater Toronto Area at this point in time. Now, if you've stuck with me this far, I appreciate it. Here is a look at those condo numbers that I promised. It's a similar pattern to what we saw on the freehold side in the condos. We are seeing that since Q3 of 2023, terminations have actually outpaced sales in 1, 2, 3, 4, 5, 6 out of the 7 quarters since then. We saw that uptick from Q4 of 24 into Q1 of 25. And, really peaked out in Q3 of 2024 when this ratio almost got up to 1.8%. So not quite, but almost twice the amount of terminations that we actually saw reported sales on the condo side. And that trend line, if you were to draw one, is clearly going up and to the right, signaling that I think that's a trend, again, similar to the freeholds, where it may continue. We may see terminations continue to outpace sales, and kind of just highlights that stress that we are seeing in the GTA condo market right now. I think the actionable insight for sellers is quite obvious right here. Buyers are not meeting seller expectations if you have expectations that are kind of set in the sales numbers that we saw a few years back. You need to be pricing realistically to attract buyers to get an offer done. And for buyers, it's the exact opposite. Continue to be patient. One more anecdote that I want to share with buyers is that even in offer night scenarios, I am seeing a lot of evidence that properties are still selling conditionally. So you don't need to remove all of your conditions from your offers right now. Get that home inspection in there if they don't have one provided to you, or if you're not happy with the inspection that the sellers have done. Get that financing condition in there as well. Really protect yourself, because I've even seen offer nights up to 8 offers, 11 offers, where the kind of winning bid, I hate to say winning, but the successful offer was a conditional sale. Make sure you protect yourself. I hope you got some value out of today's video. If you did, like I said, like the video for me, subscribe to the channel so you don't miss anything going forward. I try to do something like this every single week. Thank you so much for sticking with me right through Until the end, until we speak again next time, please stay safe and cheers.